Welcome to the Pro Tickers Deep Dive, your go-to breakdown of the stock movers and major stories at the close of global trading. Let's dive into today's market action. Today, we're unpacking a really fascinating market. You've got old giants stumbling, some forgotten players rising again, and innovation just reshaping whole industries.
Yeah, it's a compelling look at adaptability, isn't it?
Right.
And disruption, of course.
Absolutely. So first up, let's unpack a significant stumble. FedEx, ticker FDX.
hmm
It was down as much as 6% pre-market. That's quite a jolt.
Yeah, it's big.
And this isn't just, a slight dip. They actually issued a profit warning for the current quarter and maybe even more notably, withheld full-year guidance.
Yeah.
It really makes you wonder what's going on sort of beneath the surface of global trade there.
Well, that's a huge move for a company of FedEx's stature, like you said.
Yeah.
What's fascinating here is the reasoning they gave: uncertain global demand.
Uncertain demand. Okay.
Yeah, and they specifically cited a $170 million hit from changes in U.S. tariff rules, the ones impacting packages from China.
Right, those tariffs.
Plus, you've got the ongoing pressure from Amazon's in-house delivery network. That's not going away.
Still a factor.
Definitely. And high fixed costs.
Mhm.
It's all really challenging their once dominant position. And, this isn't just a challenge for FedEx. It's often seen as a kind of bellwether for global trade.
That's what I was thinking.
So it suggests broader headwinds, maybe, for economies reliant on cross-border logistics. It forces us to consider, is this just a temporary blip or maybe a more sustained shift in consumer behavior and supply chains?
So, okay, if FedEx is indeed this bellwether, should we be reading this as a significant warning sign for the broader global economy? Or is it more company specific, do you think?
I think it's probably a bit of both. While specific challenges like Amazon's expansion are pretty unique to FedEx, that tariff impact and the whole uncertain global demand piece, those are indicators that resonate, well, far beyond just one company.
Okay. So while established giants like FedEx navigate these choppy waters, some companies are proving adaptability is really the ultimate currency.
That's a good way to put it.
Speaking of strategic pivots, let's talk about BlackBerry, ticker BB.
BlackBerry.
Long gone are the keyboard phones, right? But the stock surged an incredible 11% pre-market. It's amazing when you think about their journey.
It's such an interesting trend, isn't it? They've successfully reinvented themselves. Now they're a cybersecurity and software company.
Completely different.
Totally. And they reported a surprising profit, actually. $1.9 million in their fiscal first quarter, and revenue beat expectations, too.
Wow.
They even raised their full-year revenue forecast. Now looking at $518 million to $538 million, BlackBerry's profit here, it isn't just a number. It's like a masterclass in strategic reinvention, proving that these legacy companies can thrive if they decisively shed those old identities and commit fully to, emerging sectors like cybersecurity.
That is an incredible pivot from a hardware titan. But I have to ask, is a $1.9 million profit truly significant for a company of BlackBerry's, past stature? Or is this more of a symbolic win that just hints at future potential?
That's a fair question.
Yeah.
For a company that was really struggling, it's definitely a symbolic win. Hugely symbolic. It validates their pivot.
Okay.
It signals to investors that, yes, this new direction is viable and the company can return to profitability. So important stepping stone.
Right. Makes sense. Okay. So from old tech finding new life, let's go to the very new digital frontier, Coinbase.
Crypto.
Climbing nearly 5% pre-market. And this was after being the top performer in the S&P 500 yesterday. That's an impressive run for them.
Yeah, it really is. And this raises the important question. What's behind this rally?
Exactly.
Well, there seem to be two major catalysts standing out. First, you've got the U.S. Senate approving a bill regulating stablecoins.
Okay. Stablecoins. Remind us quickly.
Right, so those are cryptocurrencies designed to minimize price volatility, usually pegged to something stable like the U.S. dollar.
Got it.
And they are a significant revenue stream for Coinbase.
Yeah.
So that regulation is key.
Big for them.
Huge. Second, there was an analyst upgrade from Benchmark Capital, and they specifically cited stablecoins as the reason.
Interesting timing.
It is. And this move also coincides with a broader uptick in crypto markets generally. Bitcoin climbed above $107,000. So, that stablecoin bill, it signals a crucial step towards mainstream crypto adoption, maybe regulatory clarity.
Which everyone wants.
Exactly. And that could potentially open up significant new institutional investment avenues, really legitimizing digital assets as a perhaps long-term financial instrument.
So, okay, this regulatory clarity really helps legitimize things for Coinbase and the broader crypto space.
Yeah.
But how much stability can a bill truly bring to Coinbase's revenue stream in the long term? I mean, given the crypto market's inherent volatility.
Right. It doesn't eliminate volatility, not
Yeah.
at all, but it provides a framework.
Okay.
Regulatory clarity can attract more institutional players. It can increase user trust,
Okay,
and that could lead to more consistent revenue streams for Coinbase, even if the underlying assets continue to fluctuate wildly.
makes sense. A framework, not a guarantee.
Yeah.
Okay, and finally, something truly electrifying.
Literally.
Ah, yeah. An electric vehicle battery manufacturer, QuantumScape, ticker QS, absolutely skyrocketed, up 37%.
Wow, 37%.
Solid-state batteries always sound like something out of science fiction. Is this the breakthrough we've been waiting for in EVs?
Well, what's fascinating here is the news. They announced a breakthrough in solid-state battery technology. Specifically, a new production process incorporating an advanced Cobra separator into their baseline battery cells.
Cobra separator. Sounds cool.
It does. And this separator is crucial. Apparently, it allows for a significantly higher energy density and improved safety, especially at higher temperatures. That's been a major hurdle in solid-state development. So, if we connect this to the bigger picture, solid-state batteries are widely seen as the next major leap for EVs. The potential for greater energy density, faster charging times, improved safety.
The holy grail, really.
Kind of, yeah. This is a game changer if it pans out. Though, scaling. Scaling remains a significant hurdle for any new battery technology. Always does.
Right, you mentioned scaling. We've heard about battery breakthroughs before that, never quite materialized into mass production. What makes this Cobra separator different, maybe? Or what are the biggest challenges QuantumScape still faces in scaling this innovation for the broader EV market?
Yeah, good point. The Cobra separator seems to address a core technical challenge, which is a big step forward.
Mm-hmm.
But the path from a lab breakthrough to mass production is still really long and, frankly, very capital intensive.
Always the way.
Always the way. They'll need to demonstrate consistent, cost-effective manufacturing at scale. And that's where many promising battery technologies face their toughest test. So, still hurdles to clear. Well, that wraps up our deep dive into today's key market movements. As we've seen today, whether it's, battling tariffs, reinventing an entire business, or unlocking new energy tech, the market is just this relentless proving ground for innovation and resilience.
It really is.
It leaves us wondering, doesn't it? Which established giants are maybe most vulnerable to disruption next? And who will be the surprising winners of tomorrow's technological leaps? Food for thought.
Definitely. Thanks for listening, and we'll see you next time on the Pro Tickers Deep Dive. Stay sharp and stay informed.